Hello. World News, Thursday, 14th of July, holiday in France, celebrating the anniversary of when it was more than haircuts that were quite the thing in that day. It was the cuts were a bit more serious. So let's get on with the news. First up is the FRBSF, the Federal Reserve Bank of San Francisco, an economic letter called the Gauging the Impact of the Great Recession. They write, the Great Recession of 2007 to 2009, because it's finished of course, coming on the heels of a spending binge fueled by a housing bubble, so far has resulted in over $7,300 in foregone consumption per person, or about $175 per person per month. The recession has had many costs, including negative impacts on labour and housing markets and lost government tax revenues. The extensive harm of this episode raises the question of whether policymakers could have done more to avoid the crisis. There are 4 charts in this paper. First one is real personal consumption expenditures per person. Very important. 70% of the economy is personal consumption expenditures. And these are the last 3 recessions. Light blue is the 1991 recession, 2000-2001 recession in green, and this gone recession in red. And you can see how personal consumption expenditures really didn't stop in either 2001 or 1991, but they've really slowed down quite a bit more in this recession. The next chart is real household net worth per person. Similar sort of setup, and you can see although they went sideways for a while after the recessions, they soon blasted off again, 91 and 2001. No sign of blasting off upwards this time. Do you think they will? Or don't you think they will? Next is personal consumption expenditure, and this is the difference where it could have been. Down bottom left it says nominal, that's just numbers, we don't need to deal with those. Real is much better because that's allowing for inflation. But because this is big numbers divided by population, what we really want is real per person, allowing for population increase, which is the red one, which we can have faith in. And it was rising nicely up until the recession, where it obviously went down, but they've projected it to where it would have been. And then if we follow the red line down to the post-recession trend, it leaves a pool of very murky looking water there. Now you'd say, well, that's not too important, but the fact is that back before the recession many people were borrowing money predicated on the fact that they would be at the top of that green line pre-recession trend and not down below in the post-recession trend red. And that's where they are. They're in the red, not the green. And there's a lot of bad debt in that murky water. And the last chart, the chart 4 that they've used in this paper, is the M ratio, a favourite of mine, and you've seen it many times before. But there it is again. Moving on. Financial Times, over in Europe. Very strange. Okay. Between 1995 and 2000, Italy's public debt was 118% of GDP, 118, 63% higher than Germany's. However, the real interest rate differential between the 10-year Italian and German government bonds was negative, signalling that investors considered German bonds riskier than Italian bonds. This is 1995 to 2000. History has been proved that this was mispricing of risk. It is unlikely that we will return to that environment. I quite like that, but it just shows, how things change. Moody's downgrades Ireland to BA1 from Baa3. Ireland goes junk, just to say we concentrate now on Italy and Spain maybe, but Portugal and Ireland and Greece naturally are still diving. Business Insider gives us a nice article written by Paul Quintaro, who normally writes for Benzinga, about Turkey. It's a strong headline, why Turkey should prepare itself for an economic collapse. But just the opening paragraphs of it describe a general macroeconomic thing quite nicely. The Turkish central bank is engaging in reckless policy. Those invested in the country should prepare themselves for the consequences. Now, reading over the last 18 months, the Turkish central bank has been praised for its its novel policy, and they thought they were doing something really quite splendid. And, well, they obviously just weren't sure about it. So we read anyway. Despite a rising rate of inflation, the Turkish central bank is maintaining a policy of keeping interest rates low. The bank may be hoping to prevent the country's currency, the lira, from appreciating. They put the interest rates up, more likely people will invest their money in lira because they'll get more interest for it. If the lira remains comparatively cheap, Turkish exports should benefit on the global market. This is what the UK are trying to do. As goods from Turkey are priced in lira, a depreciated lira may make the goods more attractive to foreign consumers. Naturally, that may keep Turkish goods in demand and workers in Turkey employed. So far so good. However, the policy may backfire. As Bloomberg reports, a Bank of America Merrill Lynch economist anticipates inflation to rise to 7.5% by the end of the year in Turkey. An economy can tolerate a higher rate of inflation for some time, but not for the longer term. As last month's riots in South China showed, inflation may lead to severe civil unrest, especially in developing economies like Turkey. It is very difficult, driving an economy. And these guys are going to have to get used to the idea. Egypt's brothers need an economic policy. For weeks now, Western visitors have been trooping in and out of the offices of the Freedom and Justice Party, the Muslim Brotherhood's newly licensed political arm in Cairo. They conduct earnest conversations on the fake leather sofas, contemplate the Quran quotations framed on the office walls, and try to figure out what exactly Egypt's most powerful independent political grouping really wants. Most questions concerning Sharia, the right of women, or Egypt's policy towards Israel, but the Egyptian revolution was also an economic revolution. If the Freedom and Justice Party took power, what are the Muslim Brotherhood's economic plans? Can't just pray, can you? Maybe you can. This is a powerful article, and of all the links I'd recommend reading this. This is, reading it, you could feel Joseph Cotterell's feelings in the article. No, the ECB can't prop up Italy. That's the European Central Bank. We won't know if it really did happen, not until next week's figures on securities market programme purchases, current total 74 billion. But since there was plenty of rumour on Tuesday that the European Central Bank, via the Bank of Italy, intervened to buy Italian bonds from a terrified secondary market, mind if we point something out in the interim? This is too big for the ECB. Too dangerous, too much like monetisation of debt, even if the bank's collapsing standards. By the bank's collapsing standards, possible, yes. Sustainable, not at all. And the whole article goes on in that really feeling vein that the ECB, you see, the Fed can buy American bonds, bills and notes. The world will always want them. But the ECB has been buying Greek, Portuguese and Irish bonds, and now they're buying Italian bonds. The fact is that the point is that they might be buying complete crap. Martin Wolf will finish with Financial Times, a good article again. From Italy to the US, utopia versus reality. It's good financial writing by Wolf. In the Eurozone, the fiscal crisis is lapping on Italy's shores. In the US, the administration declares it will run out of funding early next month if the debt ceiling is not raised. Far fewer Europeans than Americans believe public sector defaults are beneficial. But important Europeans share with the Republicans the view that there are still worse outcomes. For reluctant Europeans, the Eurozone must not be a transfer union. Or must not be a transfer union. For recalcitrant Republicans, taxes must not be raised. Fiat justitia et pereat mundus, or let right be done, even if the world perishes, is the motto. Fiat justitia et pereat mundus. Let right be done, even if the world perishes. That seems to be what they, or a lot of they, are up to. And normally it's us that do the perishing.